Time Out Research Market Insights video for August 31st, 2023. Hey everybody, Willie Delwich here. Glad you have tuned in. Glad you are listening once again to our 3 for Thursday Market Insights video series where we take a little bit of a closer look at some of the things that have happened in the market this week, maybe a little shorter term perspectives, just new developments that I think warrant paying attention to. So welcome aboard. Let's get to it. In terms of what we're talking about today, we're really trying to answer the question, have we seen a bounce? This week we're up 2.5% or so on the S&P 500. If we finish strong, it could be only the third 3% move in all of 2023 so far. For reference, we had 20 of them last year. So could be a big week for stocks. And so definitely some sort of bounce. The question is whether or not that bounce turns into a new beginning for a new bull market, or we're still stuck in this kind of in between. Is a bull market still alive? As a bear market reemerged sort of environment. So what are we going to do to look at that? First, we'll take a look at the bounce, look at what's happening beneath the surface, look at the earnings revision trend. It's still rising. That bodes well for the prospects of further upside from here, and then take a look at what's happening from a global breadth perspective. So let's get into it. Top line here, that's the S&P 500. Support has held up between 4,300 and 4,400. And as it has, we've seen new highs, get back above new lows. So net new highs is positive again. Yet yesterday, I believe it was, for the first time all month, we had more stocks making new highs and new lows. So getting the breadth beneath the surface back into positive territory bodes well, as does the S&P 500, holding at support here between that 4,300, 4,400 level. Earnings revision trend, that continues to generally move higher. On a shorter term basis, it stalled out a little bit, but the trend is still up and to the right, higher highs and higher lows. When the earnings revision trend is rising, stocks usually hold up pretty well. So this would argue in favor of continued strength, even as some of the calendar related issues loom large as we head into September and then the latter part of this year. So earnings revision trends still rising. That's a positive. But there's work to be done from a global breadth perspective. Yeah, we're out of the red zone. We're no longer just 13% of equity markets above their 50-day average, but go back to the beginning of this month, we had 90% of markets above their 50-day averages. So getting above 40% now is out of the red zone. We need to get above 70% to get back into that green zone, where over time we tend to see stocks rise. So still some work to be done there. We're going to leave it there for this week's 3 for Thursday upside. Yeah, we've had a bounce, but I think at this point we still need to see further improvement. It's heading in the right direction. But we want to see the market be able to build on some of the strength this week and prove that it's not just another example of volatility emerging. And as we've talked about in the past, volatile markets tend not to be strong markets. So let's see some sustained strength, further new highs versus new lows, more equity markets making, getting above their 50-day averages. Then we can start to lean into some of the improvement we've seen this week. We'll leave it there. Talk to you again next week. Have a great week, everybody.